Welcome back, traders, to the Best Trading Hub, where we move beyond the basics and dissect the strategies that separate consistent profitability from hopeful gambling. If you're tired of giving back your hard-earned pips to the market because your entries are always a step late, or you're constantly getting stopped out just before the move truly begins, then you need to understand the critical battle we're breaking down today. Sniper versus confirmation entries. Let's be brutally honest. The dream we all chase is nailing the absolute low or high, entering with laser precision like a market sniper and riding the entire trend. It's the pinnacle of trading ego. But how often does that perfect snipe turn into a disaster? Watching price tick against you by a mere pip before soaring without you. On the other side, we have the disciplined confirmation trader who waits for the market to show its hand. But does this safer approach mean you're forever sacrificing a chunk of your reward and potentially increasing your risk on false breakouts? Today, we're not just talking about entry techniques. We're exposing the trader psychology, risk calculus, and market context that dictate which approach will actually protect your capital and grow your account. In the realm of expert trading, your entry philosophy defines your entire trade profile. The sniper entry is an act of supreme anticipation. You're operating on higher time frame structure, order flow imbalance, or a pristine confluence of support resistance with Fibonacci or institutional levels. You're not waiting for a candle to close or a pattern to fully form. You're predicting the turning point itself. The profit potential is maximal as your stop is tight and your run to target is long. But the cost? Your win rate will inevitably be lower. This is a high-risk, high-precision game that demands an ice-cold psychology to handle consecutive stop-outs, trusting your analysis over the immediate market noise. It's for the trader who has the patience to wait for that A+ setup and the fortitude to execute without flinching. Conversely, the confirmation entry is the art of reaction. You're surrendering the very first part of the move for a higher probability of direction. This could be a candle close beyond a key level, a specific pattern completion like a 3-drive or a bullish engulfing on the 15-minute, or a momentum indicator aligning on a lower time frame. Your win rate typically increases because you have evidence the move has begun. However, the trade-off is real. Your stop loss must be wider as you're entering after some movement has already occurred, which directly worsens your risk-to-reward ratio. You're also more susceptible to entering during false breakouts or exhaustion points where the smart money is taking profit. The critical insight for the expert is that neither is inherently superior. They are tools for different market conditions. A sniper entry thrives in ranging markets with clear, tested boundaries. A confirmation entry is often king in the early stages of a strong trending impulse move, where waiting for a pullback confirmation ensures you're not buying at the top. The true edge comes from knowing which market regime you're in, aligning your entry style accordingly, and most importantly, managing your trade based on the entry you took. A sniper entry must never turn into hope. A confirmation entry must not become chasing price. So which camp do you fall into? Are you a disciplined sniper or a reactive confirmation trader? More importantly, are you flexible enough to switch gears when the market structure changes? Drop your answer and your biggest challenge with entries in the comments below. Let's get a discussion going among serious traders. If this breakdown of high-level execution resonated with you, smash that like button. It helps the algorithm push this content to more dedicated traders like you. Subscribe and hit the notification bell because next week we're deconstructing how to manage these different entry types through advanced position sizing models. Until then, trade smart, trade disciplined. This is Best Trading Hub signing off.